Hello, it's the 18th of February. I am TUNJI Andrews and you're watching Business Nigeria. Now, Dr. OKECHUKWU ENELAMAH, Nigeria's Minister of Industry, Trade and Investment, was at the Bank of Industry's head office in Lagos, and he had some things to say on foreign investments.
We mean one in which it is progressively easier to do business. We mean an environment where policies are predictable and consistent. We mean an environment where the government acts as a partner to business and investment and not a competitor or an adverse regulator.
Now, the dwindling consumer spending power in Nigeria is on our radar today. We catch up with EXOTIX Partners, the director and head of West Africa Research, ESILI, EIGBE, and EFEMENA, ESALOMI, VETIVA Capital's management consumer analyst. With the continued huge disparity between the interbank and parallel market, we talk FX and the cost of doing business in our dear Nigeria. And lastly, debit harassment by banks definitely needs some explanation. The group called Consumer Advocacy for Nigeria say they have some questions for the banks. All that in the next 30 minutes. First, our business news with Michael.
Thank you very much, Tunji. And now on to the news making headlines for today. The Integrated Oil and Gas Limited has been given initial license to commence preliminary work for a 20,000 capacity modular refinery in one of the islands on the coast of Lagos. The refinery is expected to go up between 75 to 250 million US dollars. The Naira slides further against the greenback at the parallel market due to recent economic developments, which has seen the Naira lose over 20% of its value at the parallel market in the last 10 days. However, the Central Bank of Nigeria's official rate remains unchanged at 197 Naira. The Japanese government has offered a credit line of $800 million to Nigeria to rehabilitate and extend the lifespan of the Jebba power plant. Further agreements will ease the way for a 578.4 megawatts installed capacity in Jebba hydropower plants to access the loan.
Thanks, Michael. Now, consumer spending power in Nigeria has been stagnant for the past 2 years. That, however, is falling, and perhaps freely, as a result of the current economic situation in the country. I am joined in the studio by EXOTIX Partners Director and Head of West Africa Research, ESILI EIGBE, as well as EFEMENA, ESALOMI, VETIVA Capital Management Consumer Analyst. But first, Tosin, what are we seeing and what is the impact on the SME space?
Tunji, it has been quite dramatic on that space. I mean, we're beginning to see that the lingering macroeconomic challenges, it's taken its toll on consumer spending. And for the SMEs that contribute about 50% to the GDP, it's a double whammy. From an internal point of view and from an external point of view, the difficulty in accessing Forex is beginning to impact on their businesses as they are finding it difficult to do. And the interesting part of it is this, like for instance, we spoke to one of the operators, they applied in November 2015. However, the demand was only met in January and they only met 5%. So not only is the demand not being met fully, the met portion is done in an untimely fashion. And also we can see that the consumers are beginning to downtrade to value brands as a result of this impacting costs that the consumers, the SME players are passing on to the consumers. For instance, GSK tried increasing its price of Ribena by from 50 Naira to 55 Naira in November last year. They had to reverse the price increase as the volume was beginning to drop drastically. And it's not just GSK, you just name it. Also, the pure water, the price rose by about 65%. The players in that sector said that the key cost of manufacturing the sachet has increased, and now they're passing the cost to the consumers. So now the question that the SME players and even the consumers at large in that sector, that is in the trading in the consumer sector space, are asking is, what do they do with regards to this increase in cost? Are they going to hold on to volume and drop prices, or are they going to hold on to the price and not pass on the prices to the consumers?
We all know, we saw that the initial devaluations of last year took a while before it entered into before it fed into prices. At this point, has that pressure eased? What are we seeing? Is it just that some people are trying to take advantage of the fact that there's scarcity of dollars to try and increase their prices, or is it factual?
If I step back a little bit, I think that there's still growth in consumer spending, but it's just very, very subdued at the moment. I mean, obviously we've come from levels of sort of double-digit levels of growth, and so having slowed down to very low single-digit, I think it's obviously worried or translating to a lot of concern for a lot of the SMEs and the corporates you talk about. I think that truly, the consumer may be cycling now that devaluation that we saw, especially I think around February last year. But just concerns about the future as well continue to keep pressure on the consumer.
I see you nodding. I would have preferred it if you were shaking your head in disagreement, but you agree, right?
Yeah, I do. I would add that, in addition to what he said, consumers are still spending, but they are spending on relatively cheaper products. And these are areas where consumer goods companies have found it very difficult to pass on the cost to consumers. So along with increased cost on their end, you're seeing lower margins from, lower revenue bases and then increased costs.
So see, you spoke about the fact that they were going to value brands. So like, again, you said Ribena tried to increase its cost, even though I think children will still force their parents to buy that. But pure water, for instance, there was something that preceded pure water. Don't you think people could start to cut down on that and start looking at alternatives in that area?
Well, why is everyone talking about, like, what
I
possible
mean, that is
alternative
what
is?
affects the people on the streets. I mean, they're in traffic, it's what keeps them cool. So I think that should be one of, that probably should be one of the parameters to test if prices are actually affecting the common man on the streets.
It is affecting them when they're talking about it. I mean, if you look at across the board, it's not just the pure waters, I mean, just all the commodities. And even if we go to some supermarkets, like the smaller ones, you can see that the shelves are beginning to thin out because they are struggling to get the forex to import the goods that they need. The larger listed companies are at a higher advantage, at a better advantage than the smaller players. And those are the people that we're more concerned about. I mean, they're the hard pulse of the economy.
ESILI, we were with the Minister of Trade today. Fantastic speech, which particularly did not tell us much. What reprieve do you see in the future?
Well, I'm still very...
Is there any hope right now? Because we didn't get much from...
Well, it depends on what future you're talking
today.
about. Yeah? So if you're talking short term, there's clearly still a lot of headwind. I believe probably more downside than upside at all. But if you're saying sort of medium to long term, I'm still really excited about the opportunity in Nigeria. First, very strong demographics. It can go on and on. So 170 million people. Urbanization rate very high, and as you pointed out as well, you have loose water, as a very big sort of portion of total sort of water consumed in the country, in that there is definitely opportunity for swapping loose water with bottled water eventually, and we can go on and say the same as well with beer, spirits, So if I was a long-term investor, Nigeria is definitely still a very big opportunity. And you've seen that, as far as deals are concerned in Nigeria, it hasn't really slowed down deals. There's still been quite a number of announcements. In fact, today I was told that Seven Energy raised about $100 million, to obviously expand its facility. And there have been other investors. Kellogg's recently, JV'd with Tolerant Group to invest in the consumer sector.
I mean, there's something...
Regardless of, prospects of a devaluation naira.
Okay, you've spoken about opportunities for investors. Now, I want to talk about opportunities for consumers. I mean, we know that many of the products in the Nigerian space aren't particularly inelastic to demand, and there is a point where they can break or be made. Is this a point where consumers can start to push for lower prices on their preferred goods? I mean, we either walk away or you give us at the same price.
Speaking of opportunities, I think where the opportunities are, and we are seeing that, is the downtrading to consumer goods, value products. For the longest time, the major consumer goods companies had really operated in the premium and mainstream segment. But now the value segment is the fastest growing segment, which makes sense really when you look at Nigeria's demographics, when you have statistics of about 60%, living below poverty levels. So those are the opportunities both for consumers and for the companies, because there's a bigger market being created here. In terms of pricing, yes and no. there are costs to producing these products that must be met at some point in time.
I know that.
So consumers are going to demand quality products, but at affordable prices, and consumer goods companies have to stand ready to meet this demand.
How? It's the question.
But I think another way that manufacturers can go about it, for instance, let's look at Gala. Gala has stayed the same price. Ever since I was a child, I've always bought my Gala for 50 naira. It hasn't changed. However,
so what has changed?
They reduced the size. They could reduce the maybe size of the beef, maybe the size of the
I noticed that I was at a pizza
happen.
place recently. Their prices have increased by 300 naira, and the crust is thinner. I do not want to mention names, but essentially, I'm looking at the FMCG space, and no, let's just look at those players. A lot of them we see with Guinness. Guinness was able to introduce Origin, and that was a good strategy for the company. Now, a lot of companies are looking at the fact that consumer spending has weakened, and an option is to introduce a cheaper brand into the market, and that could help your revenue. But on the other side, if it fails, that could be very expensive for you, especially in this time. So how do you weigh that for FMCG companies?
But I think it's just, I guess, one of the challenges of being in the consumer business. If you are obviously a strong company, then you should have very strong development team. So you don't just obviously roll out a product that you haven't obviously tested on the ground. And so I reckon that, in fact, I know, for example, that Guinness did do a lot of background work before Origin was introduced. Africans, not just Nigerians necessarily, have flair for herbal products. And I think that for the longest time, Guinness FES was the strongest herbal beverage in Nigeria. And so they knew that there was an opportunity there. And so I think you're seeing the same as well across the board. I mean, only just in the beer sector, there were about 4 or 5 new products that were introduced around the Christmas holiday, and so we're getting to a point where, the market is saturated now with products, some of them obviously pitching for sort of lower segment of the, of the sort of pricing.
So I'm going to ask now everyone has your spending changed? I mean,
of course, the reality of...
Are you buying more made in Nigeria products? I'm coming to everyone now.
I wouldn't put it in that way. I'll just say that just given the uncertainty, you just want to be very cautious with spending. So whether it's Nigeria or imported products, you're just generally caught in unnecessary spend. Obviously, you're looking forward to holidays. Probably rather than doing 2 holidays in a year, you cut it to 1, or probably not at all.
EFEMENA?
I think same. I mean, you're a little more cautious, but I would say you're a little more cautious on spending on imported products. So spending anything that has to do with FX, you cut down on that a lot.
So you're speaking about made in Nigeria products. Are you buying more made in Nigeria products?
Not necessarily. I'm delaying my purchases.
Tosi?
I think I see a silver lining in all of this. On a good day, I go into the store, I pick up my favorite brand, and I get out. But now, my eyes are more open to my alternatives. I'm actually looking at it. I'm checking my options. So now the silver lining is for the SMEs to position their products because now the brand loyalty is dropping. How do I position my product? How do I snatch this market? How do I get from the profit pool? And I think that's a silver lining in all of this.
She makes a good point. And what I would like to really highlight from that is, I think for a very long time, the federal government has been supportive, highly supportive of big industries. I think but they need to be increasingly more supportive of the SMEs. My suspicion, I haven't done this, but I suspect that the SMEs probably create a lot more jobs combined than sort of the big 100 that was highlighted by the previous administration. So I think with the right incentives, you can obviously create a lot more jobs, multiples of what you're currently seeing from the top 100.
All right, more Business Nigeria after the break. Do stay with us. Now, with the continued disparity between the interbank and the parallel market, issues around foreign exchange tie into the cost of doing business. Of course, in an import-reliant economy like Nigeria, Boyega, let us see a picture of how this is looking for Nigeria.
Tunji, basically what the central bank did was prohibition, capital controls, right? And what we decided to take a look at was, how did it pan out? Now, if you look at this chart, prohibition The revenue for customs this year dropped by about 240 billion naira. That was said by the Comptroller General of Customs. So your revenue should have actually been about 1.14 trillion. It ended up at 903. Your reserves as at the 31st of July were about 31.46. They've dropped to about 27.81. The rate of attrition for the first 4 months was about $390 million. Now it's about $1 billion every month. Your exchange rates, and that was a key thing with why these capital controls were imposed. The key thing was exchange rate, to manage your exchange rate and to manage your forex reserves. Your exchange rate has gone from 230 to 345. So on this note, I don't think it's working, really.
This ties back into consumer spending, doesn't it?
It does,
I mean,
of course.
basically, you look at the fact that Nigeria is still, I mean, cost of doing business is high on its own, infrastructure, access to finance, I mean, even getting your proper documentations, there's a challenge. Then there's the challenge of even price of money. So, I mean, everything just points to the man of the streets paying for Nigeria being alive.
Well, look, I think it's definitely going to be a tough couple of months, as I said. There's more downside than upside, given sort of what the sort of monetary policy today kind of seems. I think there will be pressure at some stage to choose between, I guess several evil options that we have.
Yes, on Boyega's board now, on the video wall, you see that exchange rates, the disparities between Egypt, Angola, and Nigeria. You can see clear disparities, and also border compliance costs also greatly vary. And then, I mean, EFEMENA, it looks like Nigeria. It's doing business here seems to have all the downsides. Are there any upsides apart from the fact that we're 181 million people?
There's several upsides in the long term, obviously. There's a lot of opportunities in Nigeria based on what you said, the demographics, and just based on meeting the supply of this population. In terms of the border compliance figures you mentioned, there's always been a level of higher costs associated with imports in Africa due to some sort of trade protectionism. It's come with backward integration since the 80s, say in the brewery sector, trying to replace barley with sorghum. However, these things have not cut across board yet. So what we've been trying to achieve with some of these trade protectionist measures have not been fully realized till date. And that's why we see a lot of the pressure coming, from food imports on FX, such as wheat and sugar and oil.
Ministers and the central bank governor have said, let's start to look inwards. Might want even go into farming in the nearest possible
But it's
future.
policy that's important, yeah. I think it's important to stress that you need the right policies.
To be able to drive that.
And I guess to really cut the story short, you need to look at what was done, for example, in cement. That was a very, very good example of how you use policy to drive significant change in local sourcing of raw materials and production. The government definitely needs to present some incentives on the table. That's what encourages investment. In whatever the policy this current administration decides to, I guess, drive local content, which seems to be what they're thinking, it should not be abrasive.
Well, thank you very much, ESILI EIGBE. He's the EXOTIX Partners Director and Head of West Africa Research, EFEMENA. ESALOMI, she's VETIVA Capital Management Consumer Analyst. And thank you also, BTVA's Head of Research, ADEBGOYEGA OLATUNDE. We'll be coming back after the short break. We'll be talking about your rights as a banker in Nigeria. Do stay with us. Welcome back. In 11 days or just before then, banks might be forced to answer questions on many unsatisfactory transaction fees. The movement is called Consumer Advocacy Foundation of Nigeria, and they are leading a No Bank Day protest on the 1st of March. Their requests are numerous, but the most populous of them is to force banks to stop excessive charges. Now, SOLA SALAKO, the president, joins us in the studio alongside UCHE, the executive director of Consumer Rights Project. Welcome to the show.
Thank you.
Would like to ask to start with, what are the issues? What exactly do we have as a grievance with the banks?
Primarily the sudden flurry of all kinds of charges. like consumers have been complaining about a lot of that, excessive charges, multiple charges and all that. But between December and now, there's just been a sudden influx of certain charges that have no explanation, flip-flopping on policies, charges that were supposed to be abolished are being reintroduced, new charges are being placed on people's accounts without even giving us some time to catch our breath.
I mean, I do get the fact that we have grievances, but have we, maybe Mr. UCHE could help us with this, have we channeled it to the appropriate authorities, the Bankers Committee, for instance, because I do know that the one per mil transaction fee was agreed at the Bankers Committee meeting. A lot of these fees have gone through the Bankers Committee, they've agreed, and have we approached them to say, we are not comfortable with these fees?
You see, these are institutions that ordinarily we have expected, even without approaching them. They are supposed to be there to protect consumers' interests, the CBN and other relevant agencies. But in Nigeria, we have discovered, rather than doing that, they have always taken side with this banking institution that seems to surcharge consumers. And there's no way we'll fold our hands. That's why we have decided to come, since they cannot intervene. They're supposed to act as interventionists to protect the interests of consumers. Rather than doing that, both sides have always been on the side of banks, trying
CBN
to
has
profess, reasons why, they support the activities of these banks. So we cannot keep our foot our hands and watch such things happening. That's why we have come.
The CBN has a consumer protection department.
They have.
Have we spoken to them?
We have engaged them on various levels.
We have.
Not just directly, but also encouraging consumers who have complained to us to engage them.
Yeah.
But you find out that the structures that are supposed to protect consumers in the banking sector, whether it is deliberate or out of negligence, they are slow, they are not clear, and they take forever. So the consumer is constantly frustrated in trying to pursue any
I'm concerned now about the economic implications of this no banking day. Now, if you look at the video wall, we have banking transactions, the average banking transactions per day. It comes to a total of 134 billion naira. That is checks, NEFT transactions, NIP, e-bills paid, POS transactions, ATM, mobile money, all across the Federation. And we see that if we do successfully do this, we might see the nation being hit for at least about 134 billion in transactions for that day. That is going to directly feed into GDP numbers, affect inflation, affect job numbers. I am worried. Should we not, have we thought about this?
Look at it this way. It's hurting consumers already. And so why should the consumers be the only ones who bears the brunt of the pain in the economy? Why is it that every time the banks envisage that they're going to lose some kind of a profit or whatever, the next thing they just do is go to the consumer and charge you a little more? Why should that be?
So let's put it now. 11 days from now, what are you expecting?
Well, I'm expecting the already aggrieved consumers to heed to our call, what we are calling them on, because this is the only time to redress this imbalance, the injustice that has been taken on for a very long time. There is an aspect of medicine that is called parasitology, where if a parasite keep on feasting on the host, there will be at a time the host will not have nothing again for the parasite. So it's high time we demonstrate that action now, and there is no going back unless the authority or the, as she has said, the custodian of the economy should come back to the round table so that everything concerning consumers' interest should be discussed once and for all.
But do you think that the Bankers Committee will call you to the table?
That would be, I'm expecting a miracle. Because I have already gotten feedback from some people that they feel, oh, it's not going to happen. It's
all right, so Matt first, thank you very much for joining us. We do appreciate you. We've been speaking with the president of the Consumer Advocacy Foundation of Nigeria, SOLA, SALAKO, and the director of Consumer Rights Project, Barrister UCHE Onu. Thank you very much for being with us.
Thank you.
So, yes, Matt first, we'll be looking forward to that. Of course, BTVA will continue to watch the economy and financial news space, providing analysis that can, in turn, shape your business decisions. I am Tunji Andrews. From the team and I, it's goodbye.